So we just wrapped up a trade on IWM and we want to dive into the best practices for trading the bear flag pattern. Now, it's a pattern in a bear market that I'm sure you've heard of, but here is a quick visual as to what you're looking for. And no pattern is going to look 100% like the last, but we're generally looking for a big move down in a bear flag, making that flag pull. Then we want to have a consolidation phase, and then we're looking for the next leg down. Now, this can take place across any time frame. You don't have to look at just the 1-minute charts, the 5-minute charts, but in today's video, we're going to use a 5-minute chart example on IWM, which is the Russell 2000 ETF, show you how we played it, and then how you can take advantage of patterns just like this as long as a bear market continues. And there's always going to be downside opportunities, even in bull markets, so you can still trade these in bull markets when we have big downside days. So let's jump over. Here's again that flag pattern. It's not a perfect example with a flag pull by this exact arrow, more so this big red move down across these 5 candles right here, that consolidation phase, then the next leg down. Ideally, what we are looking for is a move back to the upside to some degree, a slight uptrend to that consolidation phase. Doesn't have to be the case, but we're looking for an uptrend of consolidation. And ideally, we want to see that uptrend push up into an area of prior support, now turn resistance. And that's going to make this trade a lot easier on you, and it's going to make the risk super easy to identify and stick to. So here's IWM. It's the Russell 2000 ETF. Let's play this out and see how this morning played out. So we have a pullback and a gap down from the prior close setting up on IWM. And here's the thought process going into this. If we push down, we're looking for consolidation, okay? If we keep flushing off the open, it's going to be difficult to judge when to get into that type of trade, right? So here we go. We're approaching the open today on IWM, and watch what happens. Boom, we've got some pretty big moves to the downside, but here's the thing. On this way down, we're under the VWAP, the volume weighted average price. Sure, you can put moving averages, exponential moving averages to potentially play that trend, but on the first, half hour of the day after a pretty big move down, we haven't really gotten any bounces. Then we start to see a pretty big wick down. We start to see some bounce action. So now we start to look at this trade for continuation potentially if this downside is going to play out and continue playing out. So let's play it out. And now we're looking for that consolidation phase. Now we see, hey, we've got a pretty big move down. We have a potential bear flag pull setting up. If we're looking for continuation to the downside, we want to see a consolidation phase. As time plays out, you see IWM consolidating right here. Now, boom, stop it right here. Take a look at this. We have a volume weighted average price, the VWAP, right above us. We also have this area right here that was a prior area of support on the way up on Friday, the last trading day that we're looking at this IWM trade. It pushes up, held that level, and then continues higher. We're going to use that as our guide now going forward, because take a look at this IWM. Look at all these 5-minute wicks. They're all rejecting right up against that level. Now, the exact level to the cent doesn't necessarily matter. You can use zones versus just one line, but this line represents that zone, that area that we're looking for rejections against. If we get a 5-minute candlestick close above, in this case, that line's around 185, happens to be a whole psychological number. If we get a close above that, that is your stop loss point at this point in time based off of this trade. Now, before we cover how you'd play this trade, I want to give a quick shout out to today's channel sponsor, Chart Prime. Chart Prime is an awesome trading suite, algorithm, and community all baked into one. With Chart Prime, you get access to some incredible trading tools like automatic pattern detection, unique indicators, trading signals, and even a Discord community centered around trading education and building profitable traders. And don't just take my word for it. Here is a look into some of the recent member profit posts, and you can see that members are banking off of Chart Prime, whether that's the automatic patterns to build their trading plans, indicators, or even some of their awesome signals and analysts who post trade ideas. Their indicators integrate right into TradingView, which makes it super easy to analyze your favorite charts, whether it's stocks, crypto, really you name it. Although many of the trading signals and the analysts in the Discord do focus on crypto trades, there's a ton to work with here. And I'd say that my favorite has to be the automatic pattern detection, whether it's indicating different technical patterns on the charts or that's candlestick patterns. It really helps eliminate a lot of the time that it would take to do your own technical analysis
and you can have essentially a bot, a system, an algorithm do it all for you. I will leave a link in the video description box down below if you want to check out Chart Prime, sign up, and get in on this action right now. They've got countless tutorials, webinars, and even live trainings that they run all the time that are meant to help you and cut down on that learning curve, giving you the best chance of success. Seeing all this and the community firsthand gives me a lot of confidence that they have your best interests in mind, and they want you to be able to capitalize in all aspects of trading, long, short, it doesn't matter. Again, I'll leave those links in the video description box down below and get started right now.
Okay, so now in terms of playing this backside, you're seeing that on the 5-minute chart, we are kind of getting some higher lows and even slightly higher highs, but generally rejecting off that 185 level. So if we're looking at this for a potential continuation to the downside, maybe we go ahead, check the 1-minute charts just to kind of see and get a better picture view of this. And you guys can kind of see this pretty clearly now. As we zoom out on the 1-minute chart, you're noticing that we have a big move down and a pretty substantial consolidation that continues to reject off that 185 level. So now what we're looking for is an attempt to test that 185, which we're actually getting, and we've gotten just right here on this last candle. And now, as we reject that, that is your trigger for an entry. We're looking for bigger wicks on the 5-minute chart here in this case, because that's the time frame we're playing off of. And that would indicate a push up buyers coming in and then quickly getting met by sellers, bringing it right down, giving us a higher probability that this plays out and we get a continuation move to the downside on this trade. So we're looking for entries up around this level. Ideally, you're not going to know that this is an area of resistance until you get a couple of touches. So you have to let time play out, let it consolidate. No need to jump the gun. We got one test there, a second test there. Here comes a third test to this level. Now on that third test, of course, could there be a fourth? Could there be a fifth? Could this kind of consolidate and drag on all day holding below that level? Sure, but now on that third test, that was our entry, and we have a stop loss now above that 185 relative high. Are you going to time the absolute top? No. In this case, we came in about 20 cents shy. Our entry was about 20 cents below that level, but when we draw in our risk to reward calculator right here, it's going to look really nice. So stop loss just over 105. And if we're looking for a 2-to-1 risk reward, that means we want to bring this guy to show us 2-to-1 right there. Let's bring it over to the left. Let's enter that trade. Now play it out and see what happens. Boom, big wick to the upside, rejected, and then sell off to the downside continuation. We got even a lot more where that came from on this IWM trade, but that is a perfect example of playing a bear flag intraday, playing it on the 5-minute chart, and using the tools that we've had, using these patterns, these indicators, using this stuff to our advantage to put us just on the right side of that 50-50 coin flip. And again, when you do this over the course of time, it doesn't necessarily matter if this trade is right or the next trade is right. It matters if you're right more than you're wrong, and if your risk reward is lined up. For example, like a 2-to-1, you're going to be in business for sure. Leave any questions, comments down below in the comment section. Like always, make sure you are subscribed here to the TC Trading channel. And don't forget, check out that holiday promo code with Chart Prime, our channel sponsor for today's video. Thanks so much for watching, and we'll see you guys in the next one. Peace.